we'd like to introduce you to a revolution unlike any other throughout the history of mankind. This is a wealth revolution, and it's going global. Did you ever think that you'd be able to benefit from the only real, time-honored investment mankind has ever known? Real estate. Real estate investing has only ever been accessible to a small percentage of the world's population. This is no longer the case. The wealth revolution means that wherever you are on your wealth journey, be it taking your first steps or taking off globally, you can join our global community, a community of real estate investors just like you. The Global Wealth Group is experiencing exponential growth, and wealth has never been this accessible. A truly global wealth revolution. We dream big, and our dream is to impact the lives of 1 billion people. 1 billion people. How will we do this? Through groundbreaking digital platforms that allow investors like you to take part in exciting real estate investment opportunities. These opportunities are waiting for you everywhere, anywhere, worldwide. Now you can invest in real estate with any amount of money, from the comfort of your couch or your internet device. Introducing our global brand ecosystem. Wealth Create, Wealth Migrate, Wealth University, the Wealth Movement.
Hello everyone, and over to you, Lee. Very excited about today's webinar, depending on what geography or location or time zone you find yourself in.
So hello to all our attendees. Good morning, good afternoon, good evening, wherever you are joining us from. Today on our panelists, we are living our true promise of being a global community, as we have got Shobhit joining us from India, Blakely joining us from the USA, our team from South Africa, Will, who is in Johannesburg, and I'm coming to you from Costa Rica. So as always, we love to have engagement throughout our webinars, but I just want to share a partnership with you before we go and you start engaging with us. So we have recently partnered with Buy One, Give One, which is an organization that has global causes where through engagements and other activities in companies, you can give to people who are in need. It is everything from education to women's rights, to planting trees, to giving water to families. And so throughout our webinar series, we have been partnering with them and with the engagement. So for today's webinar, we ask that anytime you say anything in the comments or the question box, that you follow it with an E, a W, or a T. That way we will be able to track it, and we will give a day's education to someone in need every time there's an E. We will provide a day's water to a family in need every time there's a W, and we will plant a tree on your behalf at the end for every T that we get. If you want to quote all three every time, you are more than welcome to. The more that we can share the love throughout the world, the more grateful we will be. Are ready for you to put them through their paces and ask them all the questions that you want to know about where PropTech is going and the future thereof. So please do post your questions and your comments in the question box and in the comments. And let's start by saying hello to each other and where you are joining us from. We'd love to hear how global our audience is as well. So with that, I'm going to hand over to Scott, founder and CEO of the Global Wealth Group, who will take you into introducing our panelists. Hi, Scott.
Awesome. No, thanks very much, Lee. And I'm super excited about tonight's webinar. I always much prefer Q&As to actually doing PowerPoint presentations. I sort of feel anyone can do a PowerPoint, but the Q&A is always much more fun. Before I introduce the panel, I just wanted to remind everyone of the journey we've been on, because effectively we've been on a 5-part webinar series. And what has just happened there? Hang on 2 seconds. Oh, interesting. We started the whole scaling 5.0. So it was a 5-part webinar. And if you remember, we've been through the different parts of a business, how you scale, why you scale, where we are today, and where we're going. And specifically, we did a webinar just last week on this with our chairman, Willem van der Post, that I would highly, highly recommend you watch if you want to understand this in more detail. Why are we currently going through a launch and a raise with Seeders? Well, in 2019, we did our Wealth Migrate, our B2C global real estate marketplace. It's effectively achieved product market fit. We raised $2.5 million. We invested in tech, digital wallets, supply, due diligence, and global compliance. We dropped our minimums from $1,000 to $100. We grew our distribution to 83 affiliates, 13 channel partners, 7 strategic partners, and 2 country partners. Our members are now in 171 countries, investors in 69 countries. We facilitated $1.2 billion in actual investments, and we've had over $100 million go through the platform. And that is why we're talking about scale and where we specifically are. I'll talk a little bit later to you around the growth strategy and why and how we believe we're going to scale from a 3-part process. I also want to talk through the 3-phase strategy, where we've come from phase 1, we're very currently in phase 2, and where we're going with regards to phase 3. And then lastly, a question I get asked often: what is our meta marketplace? What is happening? How do we see ourselves growing, both through diversification, through genres, through community, and through real estate? And finally, before I hand over to the panel, just to explain how the last 5 webinars have worked, with today being the 5th webinar. We started with the pitch around the entire business. So if you want to watch webinar 1, it's the pitch around the business, where it's at and where it's going. Then in webinar 2, we did an amazing webinar with our partners. We had Ishanan from India, we had Ishmael Malik from Sharia Wealth. So that's a genre-based partnership and a geography-based partnership. And we had Lyndon Booth from Wealth Point, talking about how we can scale through partners. Then in week 3, it was all around our own marketplace and what is our B2C strategy. And really, a lot of you have heard of the flywheel concept from Amazon, but how could we copy the virtuous cycle of Amazon with regards to real estate? And then last week, as I said to you, we had our chairman, Willem van der Post, where we looked at both how a business scales and the different phases of scaling, and also with regards to exponential organizations, EXOs, how the two overlay, where we're at, what is the value for shareholders, and what is the upside. Now, tonight or today is not to talk about that. Tonight or today is to introduce you to some incredible authorities from around the world and to get a perspective on what's happening in the PropTech industry, not only in your location, but from around the world. And so it gives me a huge amount of excitement to introduce Blakely Hull, first and foremost, and it is Women's Day around the world, so I think the women need to get preference today. But she's based in San Francisco. So firstly, thank you. I really appreciate you being up really early. I think you said it's nearly 5 o'clock in the morning there in terms of the process. Blakely, is that correct?
It is, but I have coffee, so we are good.
And if I look here, just a bit of your bio, you're from from Uber, head of strategy and planning and people development. You've come from a family of real estate. You're currently working at Avenue 8. And just by the way, I went and got the links of all of these different websites. It was founded in 2019. It's a real estate brokerage where design, data, and technology come together to radically improve the whole experience within the real estate space. And so with our understanding of what's happening, really, Blakely, you're right on the ground. You're in San Francisco. You're completely plugged into the PropTech space in the Bay Area. And what I would just like to ask, and I'm going to do this for each one of you, is there anything from an introductory perspective that you believe that I'm missing or that you think is relevant for people just to understand your background, where you're coming from, and specifically your understanding in terms of this PropTech space?
Yeah, I mean, I think that as you mentioned, I come from Uber. I feel like we used to say at Uber, disruption is in our DNA. And I was, when I left Uber, I was debating about going into real estate as a residential, broker, or going into a PropTech company in-house. And I had multiple offers at multiple places. And ultimately I had, what we would call like informational interviews of sorts, with multiple different people in real estate and residential real estate, brokers from, in their 20s who'd been in the business their entire life, all the way up to, in their 80s about to retire. And I asked all of them at the end of our conversation, I said, in the next 5 to 10 years, how do you see the world of real estate changing? Because from my perspective at that time, I really associated real estate with Uber and what we saw Uber going through with disrupting taxis and becoming this new technology, a new transportation platform. And so I was so convinced that real estate was changing very rapidly, like that with taxi. And every single person from like 20 years old, 50 years old, 80 years old, didn't matter. Every single person said, oh, no, real estate's never going to change. This is how it is. And so I was just really excited about getting into the space when I heard that, because, it is a lot of parts of it are very old school and not ready to embrace this change and this technology. And so, for that way, I think I'm probably a little different than a lot of my peers in the space, ready to embrace it and lean in, but excited for this conversation.
Brilliant. Well, thank you very much, and wonderful to have you online. So I wanted to move to Shobhit, and it's really, really interesting because he's the MD and CEO of Anarock Capital, who are the largest and most accomplished player in the integrated PropTech space in India and a leader in the Middle East also. They were the team that actually built the JLL brand in India and much of Asia over the last 20 years. And again, I've got your website here. And it's quite interesting, while we were just waiting to get started, you were talking and just sharing with us your own experience, not only of JLL and then forming Anarock. I just want to point out for people, because I picked this up, which I absolutely love, values over value. I think it's such a beautiful tagline. But if you wouldn't mind, Shobhit, would you just, again, share with us a bit of your background experience or any key things that you think the viewers would like to know?
It's nice talking after Beckley, and she spoke about her experience in Uber, and we were, like I mentioned, for about a decade with JLL, sort of learning how to do commercial and decoding commercial. And while we were there, we realized that there was such a massive gap on residential, right? And we said we must do something to bring it into mainstream, to try and put a proper structure to it. And in many ways, when we introduce ourselves, we're saying we're trying to Uberize residential real estate in India. It's so fractionalized at the moment. There are over 200,000 brokers in every street and corner. The experiences on transaction are so difficult. And this is one of your most expensive purchases for everybody around the world, right? When you buy residential, you're putting out last 10 years earning, the next 10 years earning, and your experience on purchase was very bad. So we said, how can we do it better? What can we do to help this industry? And we started our journey trying to literally, as I said, Uberize the residential experience, right? And that's exactly what we did, but I'll talk about it, how we sort of set up the platform. And now we're applying ALML to help focus and bring efficiencies in transactions. So that's about it, but we'll talk about it as we go.
Fantastic. Well, as I said, it's wonderful to have you. And I just love the fact we're bouncing from San Francisco straight to Mumbai and now back to Africa. And, the next person that I wanted to introduce here was Will Harris. Will Harris is the CEO of Gmaven. I'm not sure, Will, if I'm pronouncing it exactly right. So any of you, please correct me if I get any of my pronunciations wrong. But I've got Gmaven here, and I love this. 8 years ago, we began with a mission: build South Africa's best data services and commercial real estate software, solutions that liberate businesses from the pain of manual inefficiency associated with data, empowering businesses and their decision makers to win. Today, this is a reality. Talk to us a little bit, in terms of this journey, Will, and your background and specifically data and real estate, which is such an opportunity, as we all understand. It's a very data-rich industry.
Thank you very much, Scott. Guys, great to be here. And I must say, this website's about 3 years old, 4 years old, so it's due for a revamp. So we've actually been at the coalface for over a decade now. I'm a chartered accountant by background. And so everything in our world is just doing things the right way the first time. As I think everybody in commercial property knows, it's a $33 trillion industry, and it all runs on data. And so we do two things. We help businesses manage their data, and everybody in property knows this is the heartbeat of the industry. And then we layer on top of the data tools that automate processes. So commercial property professionals are all highly skilled, high earning people. And we almost think commercial property in the 21st century is the equivalent of Guild's pre-industrial revolution, where you've got really skilled people doing a lot of repetitive tasks over and over again. So that's sort of what we do, is we help businesses manage their data, and then we automate these painful, repetitive processes day in and day out. Yeah, we're Africa's largest B2B commercial real estate marketplace and stock distribution channel. Our clients range from global consultancies like Shobhit's friends at JLL, to Cushman's, to CBRE, Avison and Young, Cressa, through to the listed and private property funds in South Africa.
Awesome. Well, wonderful. You know, a lot of the talk that we're going to be talking about tonight is commercial real estate. And so wonderful to have you coming and understanding from a data perspective what is going on. Unfortunately, today we've got a little bit of sad news. Jonathan Wasserstrom was meant to be joining us. He's the founder and CEO of his own PropTech firm called Square Foot, which started 8 years ago in New York. And he's also one in the leading PropTech angel list syndicate investors with over 4,000 investors. Now, if I share with you quickly just his details, and the reason that I left him on the slides is that I had the privilege yesterday of talking with him and one of our partners, Luke, and getting an understanding of what he thinks is happening in the market. So even though unfortunately you won't be hearing it from his mouth, he's fallen ill this morning and had to go to the doctor in New York, and so wasn't able to make the webinar. But what I did want to share with you, this is his website and his company, Square Foot. This is AngelList. So you can see here that they've actually done 1,624 investments. They've done, sorry, that's the LPs that invested, and 84 investments in the last 12 months. And it's really interesting if you go and read about it here. They do half PropTech and half healthcare, marketplaces, and other things. And you can kind of see that his day job is the CEO of a PropTech firm, and then ultimately investing. What I did find interesting is that, as I said to you, I've got about 4,000 PropTech investors that actually follow them, and they're really at the heartbeat of what's happening in the PropTech space within America. And this is their rolling fund that they also have on AngelList. We're quite excited. They've actually just made an investment in us in our round that we're currently dealing with, which not only is exciting in terms of the investment, but also in terms of the scope, 4,000 PropTech investors. So at this point, I would say to Jonathan, anything I've forgotten, but unfortunately, as I said, Jonathan has fallen ill. So I'll be paraphrasing the information he gave me yesterday on some of the questions. And then I want to pivot to Lyndon Booth. Now, Lyndon Booth is the PMO of WealthPoint. Lyndon is on the Forbes top 250 tech advisors in the PropTech investment space, and has a deep understanding of the regulatory environment, tokenization, blockchain, and the future of NFTs and the industry at large. And if I share with you here, WealthPoint is effectively our B2B arm within the Global Wealth Group. And Lyndon heads this up along with his partner, Gavin Rousseau. Gavin more on the tech side, Lyndon on the PMO side, which is the commercial side, product management office. But Lyndon, just talk to us a little bit about yourself, specifically this Forbes top 250. It's really quite an esteemed group of authorities from around the world, and your background and specifically what you're doing at WealthPoint.
Sure, thanks, Scott. You started off by saying I knew a lot about compliance, and that always makes me nervous because compliance people are notoriously boring. So I will certainly try not to be that tonight. I think, Blakely used the word disruption, and I first really became passionate about understanding disruption probably in my first iteration of a career, which was in the mid-90s, early 90s, and it was in the political space. So at that point, South Africa had its first legitimate government, and there was forced disruption. It wasn't voluntary, and people in that political space had to come to terms with disruption one way or another. And so I spent 5 years in the parliament as a policy advisor working around natural resources, including land. But what really fascinated me was trying at that time to understand the psychology of how people adapt to disruption. And it was an incredibly unique opportunity that I'll forever be grateful for, because we had people on one side who were incredibly committed and had been all their lives to driving disruption, and you had people on the other side who were incredibly resistant and terrified about disruption. And it was this boiling point of what happens and how do you get people in that space to figure out a way forward that leads to something powerful. So while that's where I started, I think that's really where the passion was born in me to really understand disruption and how it works at a psychological level, and what needs to happen to encourage adoption of disruptive technologies, whether they are political technologies or technical technologies, and really how do you drive change and get, from a psychological perspective, people to embrace change. And I think that my career really, that has been a guiding passion throughout it. And it's certainly why I love the role I'm currently in, which is working with the team at WealthPoint to see how we can democratize a source of investment that has historically and definitely still today is very much a space where the elite play and the majority don't get access to. And so I'm really passionate about democratizing that.
Lyndon, I want to play this video quickly just for people to watch. I have put the link in. It's literally 2 minutes long.
Investors are looking to diversify their portfolios outside of the stock market and earn dollar-based income with real estate. With digital investment platforms, the world of offshore real estate investment has been transformed. Our investors can now get unparalleled access to global institutional quality real estate deals online. Fractional ownership allows for ordinary investors to invest alongside institutions and high net worth investors. With high levels of regulation and compliance, investing online in real estate is now more secure than traditional offline investing. Investors can review, compare, and personally choose deals that meet their own investment criteria. And through reducing risk while increasing returns, digital investment is driving a fundamental change in global real estate investing. With WealthPoint, you can now offer your own safe and secure platform, branded and linked to your online presence. Your platform will be backed by robust financial service providers, regulated in South Africa and abroad. We partner with world-class global real estate firms that have been through multiple levels of due diligence, allowing only institutional quality investment opportunities to be made available to your investors. Investing for your clients has never been this easy. A robust revenue model for white label partners provides a unique opportunity to generate revenue from an existing branded client base while offering their clients a service that has never been more in demand than now. WealthPoint, providing accessible alternative investments to the real estate sector.
So I think without further ado, we should get started. And it's really exciting when you look at this panel of people. You've got Blakely that is on the realtor side, on the residential side. You've got Shobhit that's on the residential, out of America. Shobhit on the residential side out of India and Asia. You've got Will on the commercial side out of Africa. You've got Jonathan that is on the commercial side out of New York. And you've got Lyndon in terms of the commercial component, mainly based out of the UK and Europe. So we've got a really nice mix. What I wanted to do is get started. And Blakely, if you don't mind, I wanted to get started with yourself. You know, as someone that's been in the space and understood it, and you know, you've seen the evolution of Uber and how it transformed an industry. What in your way, like if someone was asking you, what is PropTech and what makes it different from kind of just traditional real estate investing? How would you define that?
Yeah, I mean, you know, we see this trend in throwing the word tech at the end of a lot of things. You know, you have it on the slide, fintech, we have ed tech, we have all these different kind of intersections of an industry that's been one way for a very long time. And then how do you layer technology onto that as the world is changing really quickly? So, I think at the simplest terms, what is PropTech? It's the intersection of property and technology. And it is really about bringing in, data. We'll talk a little bit about data and technology information to make transactions, whether that be residential or commercial, quicker, more efficient, more effective, and more secure. And I know we'll talk a little bit about blockchain and all that a little bit later, but certainly that helps to make things a lot more secure as well. And in terms of how it's changed the traditional way of investing, I think I'm a big believer, and obviously I focus on the residential space, but I'm a big believer in if there's a will, there's a way. I always say that with my clients. And if you want to be invested in real estate, whether that be a homeowner yourself or invested in some real estate fund, you can. And PropTech has really given that optionality to people. I am an advisor in a number of different companies here, one of which is a company that's called Zero Down. And they've pivoted their model a little bit, but when I first started advising them prior to the pandemic, it was really about helping people that are in the San Francisco Bay Area who have really, really good jobs, really high earners, but don't have the money for a down payment. How do we get you into a property in a unique and creative way? And so giving people that optionality to get into real estate, as I know WealthPoints is super passionate about as well, is I think a huge byproduct of this whole PropTech revolution.
Brilliant. No, I ask sort of what I want to do is each time I want to ask one person and then kind of open it up if anyone else wants to add to that. PropTech is so many different parts, and you can see the little diagram I've got here with real estate, fintech, PropTech, retech, et cetera, et cetera, et cetera. Would you agree with me, Blakely? When I try and describe it to people, in the same way as Uber was technology coming to the transport sector, really PropTech, no matter which word you use, is just technology coming to this industry. I mean, could we be as broad as that?
Absolutely.
Okay. Any thoughts from any of the other panelists with regards to this?
Yeah, if I can quickly, I think anytime technology comes into a sector, it's got to do more than just take the existing processes and digitize it. And I think Blakely's example is a great one. You could have taken how people with good incomes were able to buy real estate with a deposit, and digitize that journey, but it hasn't evolved. It hasn't caused a revolution, a transformation, a disruption. And for me, a key piece of what needs to happen for something, in my opinion, really to be quantified or called PropTech is it needs to actually have done something more. It needs to have, because of the digitization, changed something that wasn't there before. And I like that piece of the evolution or the revolution piece. For me, needs to be part of a good PropTech definition. Otherwise, it's just digitizing an existing process. But that's not enough for me. I think we have to have that evolution piece in there.
Well, you had your hand up.
Thanks, Lyndon. I would love to talk, because this is something obviously I'm talking about in Booker here a bit here, but this is, I'd love to just talk about how PropTech is different from the traditional ways of investing in real estate, because it really is a different asset, a different way of extracting value from the traditional bricks and mortar stuff. So when I talk to people about what PropTech is, I say, look, guys, you're trying to build property empires, massive property empires, but instead of building it out of bricks and mortar, you're still building a property empire, but you're building it out of one and noughts, which sort of talks that whole exponential organization concept. And to deal with like really standard things, which I think we're all familiar with here, is success in the bricks and mortar game of real estate requires specialization in a niche space. So you want to be an expert in strip malls in Nebraska, or you want to be an expert in logistics over 100,000 square feet in West Africa. The challenge is this presents a finite set of assets you can target. Correctly architected for PropTech, you actually, and this is an important caveat, obviously, it's got to be correctly architected. Tech doesn't introduce these expansion constraints, which is a paradigm shift. And I think, again, moving on to property as a metaphor, just another paradigm shift here is that like PropTech, you can actually multi-tenant the same space. And what I mean there is if you build a a shopping center and you've got your anchor space, you can only sell that to one person. But in PropTech, you can build that one space and actually build and rent an almost infinite amount of tenants. So the unit economics, if I can use sort of tech parlance, are really favorable compared to traditional bricks and mortar investment. I think one last point before I hand over is both of these ways of investing in real estate are front-loaded with capex. There's no getting around it. So in both of these instances, you've got to build this massive railway before you can start, turning on your toll gate. It's the same thing. You want to build a massive shopping center. You've got to put a lot of money in the ground and buy the land. But differently in real estate, because there's intrinsic value in the bricks and mortar real estate, you can gear up against it. You've got land. You've got structures that you can kick the bricks. So you can get debt funding, but in PropTech you can't. It's because you're dealing with an intangible assets. It's generally you can't introduce debt in that early into the trade. And then the last thing, which is just sorry, and I'm done. But this is stuff I'm super passionate about. Is it's in today's digital world, and I don't know how many of you read the Sovereign Individual. It's super easy for guys to tax bricks and mortar real estate. Whereas PropTech being an intangible asset and something that can cross borders quite easily, it's a hell of a lot more difficult to police, both from a local regulations authority and from a Reserve Bank international cash flows perspective. And those are my 4 points, which I love.
Maybe that's why it took us 10 years to get regulated in terms of the space. I want to just pivot to the second question here. Now, this I specifically actually asked Jonathan just yesterday, and it was, what stage do you think you're at? Peter Diamandis talks about any industry that's being disrupted when it comes to technology goes through the digitization, the deception, the disruption, and then ultimately democratization, demonetization, and dematerialization. Now, again, if you have no idea what I'm talking about, it's basically a cell phone. So you can see my phone here, where nowadays on a cell phone with a smartphone, we've got access to a whole bunch of things, be it a compass, a voice recorder, and everything that are all free effectively that you didn't have beforehand. Now, if we look at the real estate space, before I go any further, and I tell you what Jonathan had to say, I'd love to just, Shobhit, maybe we start with you. Like, where do you think we are on this curve, as an industry? And I'm talking PropTech coming, when you've got 20 plus years in JLL, you've really watched the industry, the current industry, and obviously now you're part of the nascent new future. Where do you think we sit on this graph?
Interesting. I didn't know you're going to jump onto this, but I don't know what Jonathan meant by saying deceptive. But I think we are somewhere, my guess is, I'm sort of thinking about it myself, saying it should be between deceptive and disruptive, because I don't think we have reached a level of disruption at the moment. So my view is that we're going to sit somewhere in between. Lots and lots of new products, great ideas, but nothing that's kind of broken through international sort of borders and brought about a change across, like Uber did, or like something else we can talk about. But I guess we are somewhere in between, because I think the world hasn't found a common problem to solve. So everybody is solving what's locally available and not moving to a common platform. I think the moment we reach that common objective, we will disrupt. That's my view, but I'll leave it to others to sort of talk about whether they agree with me on this or not.
I love what you just said there. The world hasn't found a common problem. I would like to argue with you, and it's going to be the last question, that our common problem is the world cap. But I agree with you that everyone's not in agreement with that. Blakely, from your perspective, again, you've seen this happen with Uber. Where would you say the real estate space finds itself?
Yeah, I agree with what Shobhit was saying. We are right now, what I'm seeing is a lot of iterating. I think Lyndon's point earlier of like was great about pushing the boundaries. And it's not really, you know, in his mind, prop tech until it's really pushing those boundaries. You know, I think a lot of the disruption and companies, prop tech companies that we're seeing right now are just new iterations of old ideas. You know, we've got Picasso right now in the US, which is basically a new iteration on a timeshare, which is a very old model, right? Even Zero Down that I mentioned earlier, it's like it was a new iteration on a lease to own model. That's something that's been around forever. And so until we start seeing, you know, what Uber did was completely change transportation. You know, it wasn't just, you know, making taxis more efficient or better. It was completely revolutionizing how we moved around cities. And until we get there, I don't think that we can start moving to the right of this chart.
Brilliant. Lyndon?
I 100% agree with both those comments. I do think PropTech is going to probably have their components within it that will move at different speeds. So I think things like lease management or data-driven decision-making, I think is going to accelerate a lot quicker than other aspects, for example, investment. I think the spaces that are less regulated, less compliant, are going to be able to jump forward in leaps and bounds much quicker. And I think some of the bits that are maybe a bit more lagging are going to have a fairly long point to get to disruptive. That being said, something disruptive might happen and turn all of that on its head. And I guess that's what we're all hoping for and trying to be a part of.
Well, what's your thoughts?
Yeah, I think, but by the way, great ideas, guys. Great comments. I'm gonna run with Shobhit a bit, where his challenge that he poses, the world hasn't yet found a common problem. And I think this is echoed really nicely by Blakely and Lyndon, that you're not seeing, you're sort of just seeing like gentle iterations on solving existing problems in quite a linear fashion, as opposed to something that's super disruptive and changes the game. Perhaps to go back to the question here, which is just around the Peter Diamandis exponential framework story, I'm just going to have to go back to a term coined by a chap called Kim Van Roy, and he's Turner & Townsend CIO, and he talks about the brilliant basics, which is just formalizing data structures. And I think why this ties back to Shobhit's thing is, until you've got a standardized way that's globally acknowledged that data is stored relating to commercial property, your building blocks are unstable. You're going to struggle for different organizations and different geographies to talk to each other, and that's a problem that hasn't yet been solved. Bizarrely, I mean, there are a lot of people trying, but there's no adoption at an industry-wide level of a set of standards that is common across the entire industry, and that's applicable to definitions of GLA or rentable area across geographies, through to more complicated terms. So I think until those brilliant basics have been solved, you can talk AI, you can talk ML, you can talk IoT. A large part of that is just getting the basics right, and so as an industry, certainly you've seen the disruption. But it hasn't happened at scale yet. You've seen the deceptive growth of these innovations, but it hasn't happened at scale yet. And I think the $1 million, what triggers that what's the turning point, the tipping point that's going to actually trigger that disruption at scale? And I don't have the answers.
So it's quite interesting. Jonathan, when I asked him this question, he used an American analogy, and he said, and again, I'm not going to try and talk baseball, but he said that they were in the first innings of the first, and Blakely, you might have to help me now, the first innings of the first, whatever you call it. And I said, okay, well, let's rather talk football, because at least I think everyone around the world can at least understand that. And, you know, if it's a cricket game or even a football game, it's the first 5 minutes of the game is pretty much what he was trying to get at. You know, he pretty much said that PropTech hasn't even, it's almost, he went on as far as to say he's not even sure if we're on the field yet, to put in perspective of where we can go, which kind of resonates with what you're all saying. Shobhit, I wanted to ask you the next question, which for me was the trends around India and what is happening in India. Sorry, I'm not quite sure why my screen keeps playing games with me, but you know, what are you seeing as sort of major trends. And I know that Ishanan is online tonight and introduced us, and him and I did a webinar about 2 weeks ago that people can watch if they truly want to understand what we're planning on doing in India. But from your experience and with everything that you've not only experienced over the last 2 decades plus, but with now where you are now with your new business, etc., what are some of the trends you're seeing in India and Asia?
Yeah, happy to take that. Before I answer what are the top 3 trends, but the journey that we have seen over the last decade is earlier the first tech that we started to see in at least in Asia was simply about search and discovery. So people started to create some kind of marketplace saying you can come online and find this property, find this thing, right? So the property developers were trying to find buyers and buyers were trying to find property. And the first leg of digitization or PropTech was all about making softwares that could do this better. Sorry, there was a call for me. Then we moved on to the next stage, which is in the last 3 or 4 years, where we started to bring in efficiency, right? So we saw more CRMs on sales, more CRMs on something else. So everybody started to focus on process and bring process efficiencies. But so we've had battery of PropTech on the CRM side of real estate, of course. So I'm just talking only real estate. And then in the same era, when we were sort of at the fag end of our journey with JLL, we started to see visualization softwares come in. So there was all kinds of softwares that could help you place your furniture, move the building around. It helped you sort of do tours of assets, properties around the world, saying you don't need to leave your office, and they'll sit on top of Google and take you around everywhere, and said that's what's going to happen. So visualization softwares. And then started in the last 1 year or 1.5 years, we've started seeing a lot of fractionalization happening. So whether it's the office asset, people are trying to fractionalize and unitize, saying, can we make it smaller and accessible to larger audience, right? And it's the same thing with loans, it's the same thing on. So we've seen so many of these softwares that have come in, or tech that's coming in, trying to solve aspects of a sub product within real estate, but nobody's right now talking about a universal product, right? And somebody mentioned about AI and ML, and we've started ourselves, but we are still sort of solving a problem which is slightly different, and that because we're handling too many leads, we are trying to solve efficiencies there. But I'd love to see something at a global level that kind of cuts across geographies and says, look, man, this works. It doesn't matter which part of the country or world you are in. It works in Africa, it will work in India, it'll work in US, it'll work anywhere else that you like. So I think what's happening is that PropTech is getting and solving, I would still say, regional problems, not even national level, right? So they're still trying to solve. We ourselves have invested in a few tech companies, PropTech companies, where we find synergies. And we've recently gotten a society management app. So this kind of helps people look after their facilities. It's not facility management, it's society management and all of that, right? We think it can be scaled up, but we're still trying to get a tech stack right. It has to talk in so many languages, it has to handle so many audits, accounts, etc. So we are still trying to get it right. But when we were trying to buy it, we looked around the world saying, is there anything common? And parts of the problems are getting solved, but not the whole thing, right? So I think the top trends will be that people will come out. Definitely fractional ownership will continue to find its way around in one form or the other, probably starting with commercial and slowly moving into residential. I think people will solve commercial because that's a more global asset class, and then move towards perhaps warehousing or data centers, and then move to resi, because residential is still quite differently sort of crafted, I would say the fabric itself is very different. So my guess is that to bring something in Resi that can work around geography, we haven't yet seen. So hopefully we will see some more trends there. But fractional ownership and co-living, co-working, student housing, that's the space in which we are seeing a lot of PropTech sort of efficiencies coming in.
Sure. If I didn't know better, I'd feel like I was bribing you basically in terms of a global platform, fractionalization. We've got a project in Australia in co-living. But no, it's wonderful. I agree with you on the trends. In terms of, I just wanted to point this out, which was some research that is shared with me, which is really interesting in terms of the share of investments. And it's really interesting what you just said. It did start out in the kind of residential space, and now it's very heavily in the kind of commercial space. So it's just interesting how you said kind of stage 1, stage 2 in terms of India. What I want to pivot now, Lyndon, to yourself, and I know that you're not necessarily, WealthPoint is based out of the UK. You've been doing a lot of work, not just in the UK with the FCA there, but also within Europe. What are you seeing as the top trends within the UK? And if you don't mind, I'm going to broaden that to Europe so that we're getting a geographical view here.
Yeah, I think trend number 1 is that COVID has certainly impacted what PropTech is focusing on. And I think this is particularly around how space is managed. So whether it's how technology can enhance how space is managed in a hybrid office, for example, or in a co-living space, or even in distribution chains at a more industrial level, PropTech is really growing in this space. And to give you a simple example, there's now PropTech that'll help decide when an air conditioner needs to turn on and off based on a shared office space and who's coming in from 1 hour to the next, so that you can facilitate both temperatures but also distribution of air pathways for COVID reasons. So I think this management of space using data, using aspects that are almost impossible to control if it's a manual person who has to go and switch things on and off, PropTech is really enabling the space massively. And I think that leads into the second. One of the massive trends we're seeing is that there's almost been a power shift in that, Shobhit, it seems like you've started a trend. So my phone just rang as well. Apologies for that. There seems to be a power shift where there's definitely an emergence of a tenant coming first. So in the past, maybe the landlords had a little bit more power, but now because tenants are getting such good service from clients who have got PropTech in terms of the way they manage their space, tenants are becoming far more demanding and far more choosy. And those that have PropTech to enable that tenant experience are winning the tenants. And we're seeing it, for example, even in things like student accommodation, where just the addition of a PropTech solution into the student accommodation space is fundamentally driving massive differences in price change as well as demand. So I think that tenant coming first piece is something we're beginning to witness in this space. And I think I'm not going to go into a lot of the data-driven things like energy efficiencies, etc. I think I'm probably not well equipped to talk about a lot of those. I'll leave a lot of that to people like Will. I think the third piece that's really driving space is the investment space. So where is PropTech changing how people are investing? And this is huge because fundamentally what PropTech has done is driven down the margin. So if I wanted to invest in real estate previously, it was normally a fairly high price ticket. And that was not only from a compliance perspective, it was also because the costs of the investment itself were expensive. If I want to invest in UK and I'm saying in South Africa, I'd have to get legal advice, I'd have to get tax advice, I'd have to set up an SPV, and then I'd have to manage that, I'd have to, etc. So me spending $1,000 just would never make sense. But now you can spend $1,000 because the cost of that transaction, including all of it, can be less than $3 because it's automated and it's scaled. So there is a fundamental shift coming in the way people are investing. You don't have to own the whole asset. You don't have to have $1 million or $2 million. You can really come in at much lower levels and still get the same returns that institutional investor was getting with their $2 million ticket 3 years ago. And that's probably one of the massive changes we're seeing. And to Shobhit's point, the fractionalized space is key here, and it is driving a lot of the trends we're seeing in the investment space.
Brilliant. Well, from your perspective, you know, I know that you're working with some of the major players. I mean, you send me just some of the names here, from JLL to Cushman's to CBRE to Avison and Young, CRESA, and many of the property funds, etc. What are you seeing as the top trends? And I put here Africa. If you've got other, you know, outside of Africa, let me know. But you know, what are you seeing as the top 3 trends?
I just want to echo just briefly what Lyndon said. ESG is changing the game. It's not only it's actually, there's been a whole paradigm shift where, as a result of COVID, tenants have realized they got power. Tenants have realized without their cash flows, these property funds are worthless. And there's been this whole like crazy adjustment in power we've seen as a result of COVID, and then amplified by the schoolyard bully, actually, where these tenants realizing they don't have to sort of bow down to the schoolyard bully anymore. And I'm using that in the most sort of tongue-in-cheek way. There's also been this push by ESG. So, you know, from a compliance point of view, even providing more force to that movement. So yeah, property funds right now are not having it easy, and my heart goes out to these guys, but they will bounce back. Yeah, the trends in Africa. I'm just going to give you a data point, guys, because when we saw it, I was actually quite blown away. So this comes from the likes of Crunchbase, Savills did a report, and then there's a great bunch in Africa pushing out analytics and research on VC funding called The Big Deal, and it goes like this: the ratio, and this is from Crunchbase and Savills, of total PropTech funding to actual commercial to total funding is roughly 5%. So for every $100 of VC funding out there, PropTech VC funding sees 5%, so $5. If you apply that to Africa over the last 3 years, there's been $7.3 billion of funding into Africa, VC funding into Africa, right? You would, on that 5% ratio, you'd assume there's, let's call it $367 million of funding that's gone into PropTech in Africa. I'm not going to ask you guys to, in fact, if you're interested to have a guess, like have a go, like unmute yourselves, like how much funding, so 5% of 7.3 billion is $367 million. I was just having a look at that chart that you showed of Europe, and this is over a 3-year period. How much do you think Africa has actually got of PropTech VC funding in the last 3 years?
Not even 20.
Damn you, Scott. Help me out, somebody. I'm going to presume by your silence, you guys have all gone with Scott. Well, yeah, that's actually the reality, guys. It's $29.9 million is all the money that's actually gone into PropTech VC funding in the last 3 years. So it's hideously underfunded by like $330 million. And that's quite a good point of departure. And just to be interested, by the way, you had that chart, which was useful when Blakely was put on the spot. Of that, there's 6 sort of groupings of PropTech. You obviously got construction tech, green tech, CRE tech, yeah, thank you, resi tech, fractional ownership, and then finally the listed marketplaces platforms. Interestingly, the most funding went to platforms. So this is mainly guys operating in Northern Africa, because Naspers has got Southern Africa buttoned down process. Then second was followed by residential tech. Third was marketplaces, so you guys, and absolutely no funding for green tech, construction tech, or commercial property tech. So that's the sort of context to set the scene. It can go 2 ways. So the high road assumes that corporate venture capitalists and PropTech investors awaken to this and charge in Africa looking to pick up these discounted assets. If that happens, you're going to see a mushrooming of PropTechs. You're going to see a whole bunch of exciting things in the sector. If that doesn't happen, you're going to see continued adoption of very integrated solutions where people realize, to use the Paul Graham expression, chase two rabbits, lose them both. You've got to really focus on your niche. So you're going to find a lot of integrated type solutions and leading down the line some form of consolidation. So that's the sort of high road, low road. But irrespective, I think because Africa their development has been so backward, we saw it with M-Pesa and mobile penetration in Africa, and how literally a generation just leapfrogged from faxes and fixed line, skipped the whole laptop and went straight to banking using mobile. And that probably is going to happen in Africa, where there's no sort of the high TCO technologies, which are legacy type solutions. You don't have those issues. You're going to have guys using the latest relational databases type of solutions, and I think that's probably going to happen. We're just going to see this big leapfrog in Africa. So yeah, guys, either a flood of VC money coming in or not, and that's the alternative. Continued integrated solutions as opposed to sort of jack of all trades, master of none type approach, and then definitely leapfrogging away from high TCO solutions to super nimble Silicon Valley best practices tech, simply because there isn't the resources, and there's no point in trying to reinvent the wheel. Rather than trying to rebuild AWS, just leverage off the might of AWS. So that's my view at a macro level.
Blakely, what are your thoughts from an American perspective? If you take what you've seen happening in the market there, what would you say are the top 3 trends in the fintech space?
Yeah, I know we're getting close to time, so I'll be quick. And I agree with everything that's already been said. I think at the end of the day, the word that I would describe or the word I would use to describe the trends overall is just access. And I think there's 3 main themes that we're seeing. One is, of course, we talked about it a lot already, data and AI, machine learning, how we're using that data. I mean, Shobhit mentioned it earlier, but many years ago, decades ago, was Zillow and Redfin came out, and that was our revolutionary search. And it was actually quite innovative at the time, because it literally took the keys away. Previously, if you wanted to buy residential real estate, you had to literally go into an office with a broker, with an agent, and go through a binder of printouts of here are all the properties available. And so, tools like that, and TopApp is another one that's a really innovative tool that's bringing a lot of data, putting that data in access of consumers. Now, they don't always know how to interpret it or read it or analyze it, but just putting the data in the hands of consumers gives them that access that they haven't had before. And also puts a lot of pressure on realtors. Like, our job is not to open doors or find homes. And so if that's the case, like, what is our job, and how do we provide service to our clients and make sure that they are represented fairly and effectively? So data is a big theme. Secondly is, a lot of virtual reality, augmentation. I sold multiple homes, to Lyndon's point, COVID really put the pressure on this. And I sold multiple homes during the pandemic, completely sight unseen. And while that might be, somewhat of the norm for investments and commercial, for residential, where this is your home, where you're raising your family, that's pretty unheard of. And so tools like Matterport and just technology that we had to be able to help people even Google Street View, to be able to show them the neighborhood and help them understand the nuances of what they were buying and where they were buying. That wouldn't have been possible, 5+ years ago. So that's pretty awesome to see that evolving. And then the last piece as well is just smart devices and technology. And, Lyndon talked about this as well, but just bettering the experience overall. I have an investment property that is about 2.5 hours away from San Francisco. Smart technology is allowing me to really manage that completely remotely. I don't have to have a property manager other than, checking in on the property from time to time and, basic cleanup and things like that. But I'm able to do a lot of that remotely that I was never able to do before. So just increasing that experience by having smart technology improve the overall, whether it be management or livability of the property, efficiency of the property, whatever it may be.
Brilliant. Blakely, that's wonderful. I do need to ask for permission from the panelists because I can see we're on the hour and I've got some more questions to ask. Are you guys okay to I mean, this has been a super valuable, conversation, but are you okay to keep going?
Yeah, I'm happy, Scott. I've got time.
I'm good to go. Yeah.
Cool. What I'm going to do then is I'm going to go a little bit more rapid fire and just ask one person each time the question. So, Lyndon, when you look at what are the problems that the current investment process has, both for partners and sponsors and for investors, and how can kind of tech solve this when you look at it?
Scott, I'm going to amplify these problems by looking at it from a scenario where you are sitting in Mumbai, Cape Town, Shanghai, and you're wanting to invest into Blakely's backyard. There's a whole bunch of problems there that are almost an amplified version of someone who's looking for a property or an asset when they are in the neighborhood. And the fundamental one is trust and safety. How can I trust this? Is this property real? Are the people who have built it reputable? I can't arrive in the neighborhood and open the doors and scratch around and see what's wrong. So trust and safety is probably the biggest one in terms of what is enabled and what can enable people to diversify their thinking around investing in real estate. And if we can solve that, I think we're unplugging a massive global opportunity, because even now, most of the people we speak to, it takes them a while to think past their neighborhood that they can visit, or that if they in somewhere they have to fly to London before they buy their apartment, or they have to fly to Germany to have a look at an industrial block. So I think that trust and safety is massive. And because we're short on time, I'm not going to say necessarily how that can be solved. I do think there's some interesting challenges. If you think about Uber, the idea of getting into a stranger's car, or Airbnb, you're going and staying in someone's house, and how they solve trust and safety. And can we apply that in the real estate space? It's a good question. We're still trying to figure that out. Using the same mechanisms, or is it actually a fundamentally different journey and we're going to have to use different mechanisms? So I think that's some of the things that we're really engaging with very aggressively. Affordability is absolutely a massive problem. I think we've all mentioned it. If you want an investment property, you probably start your journey by buying a buy-to-let apartment or house somewhere, probably in the lower end of the market. But even that, for many people, that's a difficult step. So if we're really wanting to be transformative and really revolutionary, we have to solve affordability. And I do believe that's where a lot of technology-driven fractionalized ownership platforms are doing that, both in residential, but also in commercial. So I think that's an exciting opportunity because it's got such a challenge. And then thirdly, I'd probably say it's about distribution. There are opportunities out there, but how do we get them to the right people who are looking for that specific opportunity? And once again, I think there are lessons to be learned from platforms that are successful about how they, through technology, are identifying what people are looking for and making sure they're seeing the things that they are looking for. Using clever technology to really help identify that, whether it's robo-advisors, just algorithms that are running in the back end of a whole bunch of data sets and then pushing that into a single place. But helping, it's not something that a lot of people go looking for. And so it's almost going to be a scenario where, and not because they don't want it, it's because they don't know that they want it. And so it's almost going to be, how do we use technology to alert people to something that actually might be of interest to them if they could think far enough outside the box from what has always been the norm. And I think there's interesting opportunities because of that problem.
Blakely, I want to put you a little bit on the spot, Chad. It was a question I had for Jonathan, but you mentioned something earlier about AR, VR, smart devices, the fact that COVID kind of forced us, a lot of people to, even my mother started using e-commerce, which she vowed she would never use until COVID. Where do you see kind of this kind of PropTech space? I mean, buying something sight unseen, it would have been unheard of pre-COVID. How do you see it working kind of through this adoption curve where you're kind of going from the innovators to the early adopters, early majority, et cetera? Like, how do you see this working in the space you're in? I mean, you're literally at the heart of it in San Francisco.
Should I focus specifically on the residential side?
Well, just generally in real estate. I mean, let's start with residential because it's what people understand.
Yeah. I mean, I think to what, piggybacking on what Lyndon was kind of touching on just a second ago, it's, the whole idea of access to real estate is for a lot of people, even, I'm always blown away by the fact I work with very smart people who are, top producers at all your big tech companies and, very well educated, all Ivy Leagues, oh, I'm sorry, my dog just, he's awake now and just came up. No. Ivy League, engineers, you name it. I worked with them, and the world of real estate just is so foreign to them. I mean, we're not taught, our parents' generation sat around talking about this at the dinner table. This generation didn't, and they don't understand what is interest rate and how do you think about a financing and the mortgage and what does that mean and how does tax, what are tax benefits and how does that actually impact your investment. So right now it's just education. So the people that are leaning in, asking the questions, they're the ones that I would consider the early adopters. But there's a long way to go in terms of education. I mean, there's so many people here that can actually afford to buy real estate, but don't. It's always shocking to me that people say, oh, I'm so scared to get pre-approved. It's they don't want to know the number of how much they can afford. And 90% of the time they can afford more than they think they can. And they're blown away by that. And so, I think right now it's about education and, the data aspect of just getting the information out to people to show them how to think about this and how to think about real estate as an investment, whether that be your own home or, buying into, as a fractional ownership of a investment property, commercial property, whatever. People are still understanding that, there's a huge blow up right now, especially with the whole work from home environment of Airbnb and buying properties that are in secondary markets or tertiary markets that can actually be Airbnb'd, and people can get that. They can wrap their heads around that. Oh, I have this one property and I can Airbnb it on the weekends or when I'm not using it. And that's how I'm going to offset my mortgage. But buying into fractional ownership is again, going back to education. People just don't even know they have access to it.
Brilliant. Such an interesting concept. We could spend an entire day just talking about how to get, adoption within the whole fractionalization space. Shobhit, I wanted to ask you, America is often the leader in terms of, sorry, I don't know what the hell is going on, why this screen keeps disappearing. How's it going now? And I wanted to ask you specifically, if you look at America, according to this book, Unleashed, which you can go and find, 25% of all equity raised for real estate in America last year, so in the last 12 months, was, in commercial real estate, was raised online. Now, America is kind of ahead of the trend, and if you look at crowdfunding worldwide, 40% of all crowdfunding is actually done in America. So they're very much a trendsetter of what's happening. Where do you see, and how long do you see it taking before the markets like India, Asia, etc., even Europe, quite frankly, is way behind what's happening in America? How do you see it? And I know it's a guess, so please, I'm not holding you to anything, but based on your opinion, how long do you think it's going to, be until other markets around the world start to follow the trends of what we're seeing in America?
Yeah, it's complicated. I guess I knew the right answer, but I'll try and answer it slightly differently, which is, I can understand why Americans are buying and sort of raising money, fractionalized ownership in US. I think in most parts of India, Asia, property is considered as security, right? We don't have social securities in many countries around Asia, right? So people keep investing in one real asset, and for them, that's like a savings bank account, right? You keep putting property. So common sort of thing about India is men buy properties and women buy gold, right? That's simply because they don't have any other options. They have no education on how to invest in sort of listed markets, unlisted markets, private crowdfunding. So I think we are very, very far away, and we're still buying first homes, first offices. So my guess is parts of Asia, we still sort of attached physically to real assets. And that's the problem. When we talk about fractionalized ownership, I think the concept is only not understood here. So I think as we see sort of reverse migration from many countries due to COVID or otherwise. I think this concept is settling in. We have seen few fundraisers in India, in Dubai, in Singapore around fractional ownership and crowdfunding, right? It's coming in, but my guess is it's trickling in. So give it another 4 years. I think they will do this. You'll see much more money being raised. Also, I think the regulator is very uncomfortable. So in India, they're still regulating this thing. So my guess is it'll take a little bit of time, 3-4 years before it latches on in Asia on crowdfunding.
Scott, if I can jump in, because I just want to agree 100% with Shobhit. I think, I hate to do it, but I'm going to be the boring compliance guy. And probably the biggest challenge, I think, in the investment space is going to be the compliance. Whether it's in the US, Europe, India, South Africa, China, the technology and the systems to democratize real estate investing are all there and have been there for a few years now. It's really the regulators who are figuring out how to protect unsophisticated investors. And I think it's a good question they need to ask themselves, because I think the last thing anyone wants is a flood of unregulated activity where people can lose a lot of money, and people who are not able to make those investment decisions because they don't understand the asset class, they need protection. So I'm 100% understanding the regulators' conundrum that they are facing. But for those of us like ourselves who are really wanting to drive and support this democratization of investing in real estate, the barrier to growth and adoption is not going to be anything technological, deal flow, process. It's going to be education, to Blakely's point, and regulation, to Shobhit's point.
Brilliant. I want to ask, Will, and again, this is a hypothetical conversation now, but there's some great research that came out, and I'll share it with you here quickly, around PwC and the whole sort of global assets under management, and actually talks over here about the fact that $21 trillion is expected to come into kind of the alternative asset space. So that's real estate, private equity, private debt, etc. Now, if I look back to the question here, how do you see it evolving over the next 10 years? You're obviously starting at the data point, and I'm not just talking now with Africa, I'm talking worldwide, your opinion, in terms of the evolution of people actually investing using online around the world.
Sure, Scott, that's a very layered conversation, question. It's a good one. Big theme that I'm quite enjoying at the moment is this whole concept of power decentralizing and traditional decentralized ways of doing things breaking down. A super example of that is the way that power plants are decentralized, where you can have a facility sitting on your roof with an inverter, and no longer you're dependent on a big producer pushing power into you using the grid. Another example is how the traditional state-owned telcos have been disrupted. Traditional state providers of telecommunications have been disrupted, and now the private sectors come in and provide those solutions. Same thing even with education. I mean, the big universities are starting to put content online, and you've got wonderful innovation coming from the Udemy's and Coursera's, and even private people looking for clicks on YouTube and educating people. So that whole concept of decentralization and democratization, it feels to me is going to make its presence felt in the way that your average person on the street invests in assets. And so I sense, and I've been paying attention during this session, is that this concept of fractional ownership, lowering the barrier to entry in any asset is going to be a thing, and it's going to be tech enabled, and tech will enable it to be compliant from a legal, regulatory, security of investment perspective, as well as provide that missing education piece. So yeah, that would be my bet. Really to talk your book here. It's where I sort of see the puck going.
So let's pivot to the next one. And Blakely, I'm not sure if you kind of want to go yet. I've got 3 questions, and I joke with dare we go there. It's my last, the this and then two more questions. But the impact of blockchain on real estate, the future of tokenization, NFTs, Web 3.0, and then to some extent, what is the regulatory space like at the moment, and how do you see this changing? Now, I don't expect you necessarily to answer all of these just yourself. I'd love, Shobhit, Will, and Lyndon equally to give you inputs, because this is the kind of the future everyone keeps talking about. However, I do remember a time, Blakely, just before I hand over to you, I was in San Francisco. It was the launch of tokenizations and crypto. We actually launched our own token at the beginning of 2018. I was in San Francisco, and there was a young lady there that was going to blockchain kind of real estate and worldwide. And I sort of said to her, have you ever invested in property? And she said no. And I said, have you ever been outside of California? And she said no. And I found it quite interesting because we found tremendous difficulty in trying to get regulated even for crowdfunding. And obviously blockchain of a deeds office is one of the most primary things that any country has. And I'd love to know kind of what your thoughts are around some of these advances of these technologies, be it blockchain, tokenization, NFTs, Web 3.0, etc., and how you see them changing the real estate space, considering again that you saw this happen in Uber.
Mm-hmm. So, I think there's many aspects of this, right? I mean, it's blockchain, there's cryptocurrencies, there's, a lot of people are focusing right now here in residential, like not a lot of people, we're just starting to talk about how can we support people buying real estate with cryptocurrency, with Bitcoin or what have you. For me, that's not the focus. For me, I'm particularly excited about blockchain as it relates to title and transfer of title. And, personally, and no offense to anyone I don't think anyone on the panel will take offense to this. I don't know who the participants are, but, I think title insurance is the biggest load of, what. I mean, I've never, ever, knock on wood, I hope I never do, but I've never had a client have to draw on their title insurance policy. I know it happens, but I've never had a client who's had to. Myself have never had to. And, when you're buying a 1.5, $2 million, $3 million asset, a few $1,000s for title insurance is a rounding error. It's not really that big of a deal, but when you actually look at it, people are spending $3,000, $4,000 on title insurance. And there really is, in my mind, I mean, the idea of blockchain and being able to actually record the transfer of assets and any liens on a property and just the entire history of a property will be revolutionary and completely disrupt the whole title world, which I'm personally very excited about.
Shobhit,
I'll leave it to the rest of the panelists to jump in on other items here too.
No, brilliant. Shobhit, what are your thoughts on some of these?
No, I
different ideas?
I agree with her saying title insurance is the easiest part to solve. It's common, it's easy, it's part fintech, part PropTech. I think it can be done. But that entails, in my view, digitization of land records, right? Who had the title? Where did it come? Who owns the property? I think, and given that the regulators themselves in many parts of the world are very closely related to this sector, right? I just think there's a whole reluctance to make this happen. Right, it's not a problem in India. It's a problem globally, right? That regulators are investing in real estate, in their personal capacities, and it's all crazy, right? So I haven't seen anywhere insurance being easy, and this is something that can be so easily solved. I mean, with PropTech, blockchains, it can be solved quite easily. So I'm fully in line with what Buckley is saying. It can be done very easily. I don't know why it's not done. Maybe we should start from that.
Lyndon, we did a presentation to some guys that were wanting to get into the tokenization kind of NFT space in the UK. And you spoke a lot about the regulatory space. Now, we don't have time today because you spend nearly an hour presenting to them. But where do you see and how do you see this evolution of technology? And you've sort of spoken a bit already in the regulatory space, but the two are completely tied together. I mean, the tech we could do tomorrow morning. It's not about the tech, it's about the regulatory environment.
Yeah, Scott, I'm not optimistic that blockchain, etc., are going to change the real estate world very much. I think it's going to drive some efficiencies, like the ones we've just been speaking about, but I don't think it is a transformative change. I don't think you're ever going to get private titles. I think that'll always be controlled by a government space, some form of regulator. So sure, they'll switch their systems onto blockchain, which will make them much quicker, much more efficient. But I don't think you're ever going to have a space where someone like Lyndon can say, okay, I'm buying this house, I'm going to put it on a blockchain, and then people can buy it and sell it over 100 years without the regulator ever getting a piece of that or being able to control or manage or watch that. So I don't think, you know, a lot of the hype is around, I'm not speaking for anywhere else in the world, but certainly in parts of UK, Europe and South Africa, a lot of the hype is, wow, this thing could, you know, you could privatize the whole process of titles by putting stuff in your own coin or your own blockchain, and then you never have to go through a regulated experience again. I don't see that happening in any part of the world. I just don't think the regulators are going to, and for good reason in some places. What I do think will be transformative is, and I'm not sure how, because I'm also a bit of a cynic at the moment, is this thing of digital real estate. So the virtual real estate world. And actually, you know, having a virtual office that you all go to where you're next door to Snoop Dogg or whoever it is and however it works. That's interesting for me, and I'm curious. I'm not convinced by it because I think part of owning, the only example that comes to mind is a horrible one, which is Trump Towers. So the advantage of owning Trump Tower is that there's only one Trump Tower. So you know what you're getting and no one else can duplicate it. But when you go into the virtual space, if you don't like your neighbor, you can throw up another Trump Tower and get a different Trump Tower experience. So I'm not convinced that it has the same intrinsic value of real estate because it is so replicable, whereas so much of real estate, as we know, is about location, location, location. But if location doesn't matter anymore because you can throw up many of them, is it actually a transformative space? So that one, I'm hoping, I'm excited. I always love spaces that are uncertain and edgy and changing. So I'm really enjoying watching the space to see what happens here.
Brilliant. Will, final comments on this space?
Yeah, I'm in Lyndon's camp. Love the prospects and opportunity of blockchain and real estate. Just worried about incentives of the regulators. I don't think that's highest on their agenda to make our lives a hell of a lot easier. They're incentivized to make money off taxes.
Yeah, and look, I think the one. Sorry,
Scott, I know we're short of time, but can I just jump in because it's actually interesting. Will, I'm wondering about that because we've spoken about this tenant come first shift, and I think what we're going to find is that regular or municipalities, areas, provinces, states that make the change quick, it's going to impact their real estate value. So if you know that you're buying into an area that's already got its registry on the blockchain, that might be worth something in terms of the price versus buying in an area that's not on the blockchain. So I think there is going to come an economic incentive as real estate is a competitive market for people to make their regions more competitive by putting things on the blockchain. So I'm not so sure. I think there will be a regulator that jumps on this pretty quickly.
My disagreement, Lyndon, it's something that I do all the time, is you put your lens and value system on a government employee whose salary is protected every month, and they have no incentive to increase their cash under management, to increase their assets under management, because it doesn't directly affect their paycheck. So I'm in full agreement with you that that's how it should work. I would love to be proved wrong, and I would love to be astonished at how these people respond. And a classic example is this concept of like a remote working visa. With COVID and people being remote workers, it opens such an opportunity from a taxation point of view to allow very skilled, low burden on the economy migrant workers to work in your economy. And I'm just been amazed at how slow governments have been to react and turn away all that potentially lucrative direct and indirect tax revenue. Forgive me for being a cynic. I'm an optimistic guy at heart.
Yeah. Well, hopefully countries like Dubai can lead the way, because as I understand it, and I don't know, Shobhit, if you're aware of the exact date, but I think it's 2025 that Dubai wants all their real estate on the blockchain. It's either 2025 or 2030. I want to guess 2025.
I think it is 2025.
Yeah. Lee's just come online and she's from Dubai originally, so maybe she knows.
It is 2025, Scott. It is part
Yeah,
of the 2025.
Yeah. So look, just on with regards to time, I've got two final questions. And the first one, funny enough, we've actually just debated quite a lot today already, which is how real estate is always localized. And, you know, Shobhit, you said, well, sorry, I think Will, you actually said we don't have a global problem yet, right up front. And I can't remember, oh, no, sorry, Shobhit, it was you, said the world hasn't found a common problem. And it's interesting because the debate we've had today is, you know, property is localized, but there is an opportunity within the PropTech environment to provide a global solution. I know we've debated this, but from the four of you, anything that you think needs to be added, or have we said it all already in terms of this balance between localization and kind of globalization?
Scott, the only thing what I'll say is I think it has always been localized because of the challenges, because of the problems. I don't think it is inherently always going to be localized. I mean, I think we're already seeing that over the last 30 years, every year, the degree of offshore investment into any real estate sector has always increased, whether that's offshore investors into the US, into the UK, into Europe, there's always been an uptick. So it's still very much in the early stages, but investors globally are already driving I want to have something offshore versus I only used to want. Interestingly, lately, the one country that does not look offshore as much as others is the USA. But apart from that, almost every other country in the world, there's an increase in offshore real estate investments over the last 30 years, year on year. So I think we are already, and I get that it's a very small percentage of total populations, but I think that is a trend that's showing that as we make things possible, there's massive opportunities for real estate, not always to be a localized investment.
My last comment, my last question. We've spoken about democratization, we've spoken about fractionalization. At the moment, in terms of the global standards, 12.9% of the world's population has access to residential property, and less than 1% has access to commercial property and other real estate, you know, other alternative assets. Do each one of you see this changing? Do you think technology can solve this? Do you think it can help solve the wealth gap? What's your opinion? You know, is maybe Shobhit, this is that common problem that we were talking about right up front.
No, so rebalancing of capital and sort of from the richest to not that much. My guess is that I think we spoke about it, that it has to get rebalanced. There is no doubt about it. I think a lot of us spoke about how to provide access, and more importantly, with access is knowledge, right? So even though you might be able to put up these tech platforms, but unless somebody is aware on how to what needs to go in, I think there's not enough information. So I guess these two have to go hand in hand. So yes, I don't like the concentration risk that I see on the screen, but I think it'll take time. I think efforts are being made by PropTech, but there's nothing revolutionary that I've seen yet.
Yeah, I completely agree with Shobhit and the point about education, because, you know, look, at the end of the day, people have a lot of options of where to put their money. You know, they can invest in Bitcoin, they can invest in the stock market, they can put money under their mattress if they're scared right now. You know, I mean, they can do, there's so many different options for them. And it's kind of about how do we help them understand the value of, like, why is it that people get wealthier by investing in real estate? Why is that a great asset class? And helping people understand the value there, and also the value of diversification too.
We need to do another webinar, Blakely, just to talk about those two things, the value of real estate and the value of diversification. I was being interviewed this morning on a podcast, literally about Ukraine. And I said, well, there's three things that people should be looking at: wealth protection, the value of real estate is that you get a predictable passive income, and the third is diversification. So it's funny enough, we were talking literally about how one can manage kind of these global uncertainties. Lyndon, from your perspective, what's your take on this kind of global problem, and can it be solved?
Yeah, Scott, I think it can be. I think real estate is a piece of it, but to Blakely's point and Shobhit's point, I think there's education around why invest in general. For a large, let's say 80% of the populations we are talking about here, it's not, is real estate a good investment? It's financial management in general. And how do I live beyond the breadbasket? How do I live beyond paying just for food, education, and a house? And what's the value of trying to be smarter with my money and invest for my own future and the future of my family? And I think that probably is, it's no good going and trying to talk to people about real estate investment if their thinking is not even on investment in general, because it is hard just to make ends meet. And I think that's a real challenge we have with the wealth gap, is bridging that piece as part of a bigger conversation.
Will?
Sure. Okay, now you're talking to a bean counter here. This is something that just makes no sense, and it relates directly to education. You have somebody who puts their money in the bank. I'm just going to use round numbers here at, let's say, 3% interest. The bank then takes that cash and lends it back to them for their home at, let's say, 10%. Like, that's the weirdest construct ever, and people just do it over and over again. And if all you're doing is just investing in debt instruments which return less than real estate, you're obviously taking money out of the bank's hands, but you're returning a lot of value to retail investors. I mean, that's the simplest play around. And we're not talking about participating in the upside on debt, which Scott, I think your platform provides. It's literally just that piece, and that's all just an education solve. And it's just sad that the banks take that delta for really providing. I'm sorry, this is a bit confidential. I mean, a bit sort of controversial, but they take that delta for literally just doing some marketing and doing some distribution. I mean, it's pretty obvious that dynamic can be dismantled, and there's some big numbers at play for somebody or an organization that's effective in doing just that piece, just providing debt in a retail fashion to property owners, and getting obviously debt returns as opposed to interest returns as a sort of high street depositor in a bank. I hope that all makes sense.
No, brilliant. Look, I'm going to close out now. I'm conscious of everyone's time. I wanted to just remind you that if you want to go and watch the webinars where we talked about our three-phase strategy, for Shobhit specifically, we spoke about the problem that we believe the world should solve, which is around the wealth gap. And what's really interesting talking about today is around fractionalization, globalization, access, education, diversification. And we believe that these are many parts that we've actually put together through our technology stack, through our offering both at B2C and at B2B. We've spoken through our growth strategy in terms of how we plan to distribute, how we plan to increase our profitability, and then how we look to advance on our technology. And in terms of this whole localization versus globalization, the way we've done it is our technology sits at the center. We built out Wealth Migrate, which was our original global real estate marketplace. We then built out the Wealth University. So for all of you on the panel, the education part is there and critically important. The wealth movement, the community, and we've then brought out the geographic areas within China, Genius U, Zuza, which was in the UK, Cashbox, which was structured notes, Private Wealth Global, that was our high net offering, and then basically India, which is where we're at the moment, literally in terms of launching India. And in the next couple of weeks, hopefully even possibly this week, we'll be launching Sharia Wealth in terms of the overall process. And with time, many other geographies and many other genres. And so we're in the middle of our capital raising. We are doing a $3 million raise. We have gone on Seeders, which means you can invest through the Seeders platform literally from £10, or you can do it offline from $10,000. You can see the breakdown. You understand now, hopefully, after watching this entire webinar series, where we're at as a business. And I love what you said, Shobhit, maybe Asia is 3 to 4 years away. But if I've learned one thing about surfing a wave, you can't wait until the wave arrives. You have to paddle out to backline and be there when the wave, when the wave arrives. And this world is definitely disrupting. It's definitely changing. And I think you've heard from the authorities today that this is happening. This is an industry that's ripe for disruption. But it's going to take a balance of not only the technology acumen, but also the industry acumen. It's really important to have a balance of both of those. And so for those of you that are interested, reach out to us. We've got different discounts on the Safe Note. We can share with you the benefits of a Safe Note and what those discounts mean. And it's an automatic discount for investors. And then lastly, the part that we started today with purpose, we're going to finish today with purpose. The part that's really important is that if people do invest, they get access to our investor tests, our wealth hacker, which is our global community, our online learning, like-minded community. You get reduced investor fees. You also get to participate at a high level in the investment committee. And if you believe in purpose, and if you believe in making the planet a better and more sustainable planet for all, then you can also gift it to others. You can gift the education, you can gift the investor test, you can gift the wealth hackers. You can even gift the starter pack, which is literally the way for a human being to get started. And then lastly, as Lee said, for every single person that invests through our Seeders campaign, we will donate at least one day to a child in Africa around education. And again, there's a quantum way that you can go and see that. So not only can you invest from a profit perspective, but you can also have a purposeful impact on the planet. And if you are interested, literally go along. Seeders is a live platform. It's the biggest crowdfunding platform in the UK. You can go in and read all about it. You can see that we're 100% over target. We've got 7 days left. It actually closes next Monday in terms of that overall procedure, in terms of where we're at. And if you're interested, speak to one of our team members. Alexander is on our team individually. Luke, who very kindly got some of the members to both Will and Blakely to join us today for this webinar, is part of Simple Capital, who's the company that's helping us move through our professional funding straight through to a priced equity round. But Lee, that is all for me. And what I would like to do is finish off, if you wouldn't mind running the survey, but also just sharing with people the impact that they had just by being here on this webinar.
Yeah, sure. Thanks very much, Scott. Let me just start the survey and then I can discuss. So right off the bat, for everyone who attended, we donate a day of education anyway. Our biggest thing is to help solve the wealth gap, and that starts with education. So everyone got a day free of education. And then through the various engagements and that, we are going to be donating 43 days of education, planting 7 trees and donating 7 days of water to people in need. So for all the engagement throughout our webinar tonight, thank you very much. We really appreciate it. And I'm sure those people whose lives you are touching will appreciate it as well.
Perfect. And while Lee's got up the survey, if anyone wants to ask any further questions, please let us know what you're thinking. I really just, while we're doing this and seeing if there's any other questions, Blakely, thank you so much. You probably deserve the greatest thanks for being up at a ridiculous hour of 5 a.m. in the morning. Shobhit, you're on the other side of the equation and it's now going into your evening. So thank you very much, for being here. To Lyndon and Will, really, really appreciate you guys sharing, and equally to Lee and your team for setting it all up, Luke and the team that worked with you to put this all together. It's been an illuminating understanding of where PropTech's going, not only where it is now, but where it's going from many different geographical inputs. So really just want to thank you all for your time. Deeply appreciate it.
Thank you.
Thank you all.
Take care. Thank you for getting us. Thank you.
Cheers, everybody.
Thanks, everyone.
Cool. Well, Lee, I think that's everything from everyone, and thank you very much for today.
Thank you very much, Scott, to our attendees who have gone through this with us. We really do appreciate your time. You are our greatest asset. So thank you very much for being with us. And wherever you are in the world, please be safe, look after yourself, and we will see you online soon. And for those who did ask for the recording, we will share that with you. Thanks very much, everybody. Take care.
Cheers,